Right, everybody, straight on to this then. Explain. Notice explain, don't just identify. Explain 6 threats which may affect our independence and how it might be reduced to an acceptable level. So again, we've got the ethical threats on one side, and then we've got how we can reduce that threat to an acceptable level, i.e. manage the risk. So let's go through the question then. You're the audit manager of Current & Co, and you're planning the audit of Orange Financials, who specialise in providing loans and financial advice to individuals and companies, and we've audited it for many years. The directors are planning to list on the stock exchange within the next few months, and have asked if the engagement partner can attend meetings with potential investors. There's an ethical threat right there. So if we attend meetings with investors, it could give rise to an advocacy threat. And that is because the advocacy threat is the risk of being seen to represent or even promote our client. So if ever you see, Orange in this case, so if ever you see a question, a scenario where you're being asked to go to a meeting or go to a function where there's a bank or an investor, always think to yourself, well, basically it's going to be an advocacy threat, that you might be seen, even though you're not, you might be seen to be representing them. Okay, so how to reduce it? Well, you can't really, can you? All you can do is politely decline the request, because you can't have that advocacy threat. So far, so good then. In addition, as the finance director is likely to be quite busy with the listing, he's asked if Current & Co can produce the financial statements. Can we produce the financial statements for them? So, if we produce the financial statements and audit them, I'm hoping you can see that this leads to a self-review threat. And actually, if listed, you actually cannot do that. We cannot do any bookkeeping, we cannot produce the financial statements and audit them. Okay, so we couldn't do that, so how to reduce that threat? Well, the only way we can reduce it is if listed, and once they become listed, we have to decline. If not listed, so until they become listed, we could perhaps do it, but maybe use different teams. Okay, different teams between those who do the audit and those who prepare the financial statements. Ideally, though, we wouldn't really be doing it because of this self-review threat. Keep going. During the year, the assistant financial director of Orange left and joined us. So their finance director has joined us as a partner. It's been suggested that as he's familiar with Orange, he should be appointed to provide an independent partner review of the audit. So, well, he wouldn't be independent at all, would he? So, the finance director, or at least the assistant finance director, joining us is a threat. And it's a self-review threat, because he will be auditing his own financial statements, or his financial statements as his assistant that he helped to prepare at least. So he would be auditing his own work, okay? And even if it was an independent partner review, he shouldn't be involved. So how to reduce it? No involvement at all in the Orange audit. And if you want to know for how long, it's normally for 2 years. So therefore we need to find an alternative independent reviewer. Okay, so this is all common sense, or at least it's common sense to me, because I've been doing it many years. But for you, the key to ethics questions is do as many as you can, because it's the same issues come up time and time and time again. They really do. So the more you do, the more you get used to it, which is why we do loads on accountancy. So, once Orange obtains its stock exchange listing, it will require several assignments to be undertaken. For example, obtaining advice about corporate governance best practice. We're very keen to be appointed for these engagements. However, Orange has implied that to get the work, it needs to complete the external audit quickly. Two kind of threats there. First threat is, why are we keen to get the work? And hopefully you see we are keen. You're keen to get extra work, extra assignments, because we're a business. Always keen to get extra customers, aren't we? So therefore we have a self-interest threat to our independence. We don't want to give them a bad audit report in their eyes, because it means we'll lose all these other extra assignments as well. So write that down. And you also have to be careful of if it's a significant, if all of this adds up to a significant proportion of our income. That again would be a self-interest threat. So what we've got to check is that it's not 15% of our gross practice income. It says this is before it becomes listed. So that it's not 15% for 2 years. And if it is, then we shouldn't do these extra assignments. So give up or decline the extra assignments. Okay. Then the other risk that they talked about there was this one, where he said Orange has implied that to get the work, they need to do the audit quickly and don't ask too much. Okay? Think of it this way. Look, get it done quickly and don't ask any questions, and then you'll get paid. Put it in that voice and you can see that it's an intimidation threat. They are trying to intimidate us by saying that we will get extra money only if we do it quickly and don't ask questions. Okay? So intimidation to do it quickly. Why is that a threat? Well, the only way we're going to do it quickly is to cut corners. And the only way we're going to cut corners is to have a poor quality audit. And therefore, we're not being fully independent. Okay, so what should we do? We should remind the client that we follow ISAs and that we have quality control. So an audit takes as long as necessary. We cannot speed it up. Okay. Go, let's keep going then. Easily put 12 marks, easily done that. We were nearly there though. The finance director has informed you that once they get the stock exchange, he would like the engagement team to go for a weekend away at a luxury hotel as a thank you for all their work. Okay, so he's giving away a nice little offer. So that nice little offer is a self-interest threat. We don't want to annoy him then because we want our nice little weekend away. So it's a self-interest threat, and we can only accept if it's insignificant amount. So remember to explain it, why it's a self-interest, that we wouldn't want to annoy him because we want to keep these goods that he's offered us. And a luxury weekend was mentioned. So luxury means it's significant. So therefore, politely decline. Okay. Keep going. In addition, he's offered a senior member of the engagement team a short-term loan at significantly reduced rates. Okay. Offers of loans, if they're a bank or something and it's at normal commercial rates, that's no problem. That's just them doing what they do. But it's the offer of a loan at preferential rates. That's the issue. You are again getting something that's significant, and so it's a self-interest. You don't want to annoy them because you like having this rate. So it's a self-interest threat. And so therefore what we must do is either decline or accept if, when could we accept? If they change the interest rates to one which is commercially available elsewhere. Okay? As I say, the key to all this is just doing them. Remember, when you're doing a threat, state it and explain it, but just keep doing questions.